So what records do you need to keep? The IRS says you may use any system that accurately shows your income and expenses. So technically, a box of receipts can qualify. After all, it shows your income and your expenses, assuming the records are complete. But there is definitely a better way. The IRS asks that you retain 4 key pieces of information for each transaction: the date of the transaction, the amount, the counterparty, so who did you pay or who paid you, and lastly, the business purpose. Those first 3 pieces of information exist on your receipt, on a canceled check, or on your credit card statement or bank statement. But that 4th piece of information, the business purpose, is the most important, I would argue. It does not necessarily exist on a receipt or a bank statement. You must proactively supply the business purpose for every transaction. And there are lots of ways to do that. You may write the business purpose on the receipt. Sometimes we see this, especially during business meals. You may store the data in an electronic system and add the business purpose yourself. You may use a software system that has an open description field that enables you to add the business purpose of each transaction. If you think back to the Excel workbook we built together, that very basic system is built to reflect the required information, including the business purpose, for each transaction. But no matter how you retain it, you must record the required information for each transaction: the date, the amount, the counterparty, and the business purpose.